Buffett is a big fan of Apple. Is it the right move for your portfolio too? Joining me now to discuss is Francisco Bido of FM Investments, head of quantitative research portfolio manager. Francisco, I know that you hold Apple long term, such as so does Berkshire. But let's start out with, what do you think that Berkshire sees in Apple?
Well, I think we both see the same thing. We see a great company with basically a really foothold, more than a foothold, a stronghold on the consumer wearables market and on the communications with the iPhone. And those things will be critical, for going forward. It's hard to imagine, any kind of technological progress, that's more impactful than what Apple brings to the consumer. So I think that's going to continue for the long term.
And Apple will be reporting after the close. So what will you be watching for in those results?
Earnings, both bottom and top line. And that's what we focus here with our strategies. We like to look at accelerating earnings and revenues. We don't have high expectations for Apple for this quarter, for the quarter they're reporting. We expect to be a little bit underwhelmed, but we still don't mind holding it long term. It's just that when you have a long-term view, these little bumps on the road, they're fairly inconsequential.
And let's talk a little bit about those little bumps on the road. I mean, we've seen what's been happening with the markets. We have been watching the consumer closely. What do you think are some of the challenges in the near term for Apple?
Well, it's just basically the economic environment. As we know from yesterday, the Fed raised another 25 beeps. That's the 10th time since last year, and that's beginning to pinch the U.S. economy. So, we expect the consumers to continue to pull back on discretionary spending. If they have a phone that works, they're not going to probably update very quickly to the newer phone. So that's a short-term challenge for Apple, and for not just them. It's pretty much anyone. It affects everybody in equal ways. However, I would like to point out that I'm not expecting a recession or anything of that nature, not with so many people working.
Oh, interesting. So you are not expecting a slowdown or a recession?
No, I'm not. No, I'm not. I think we're going to weather this, and I think the Fed's soft landing scenario, that Goldilocks scenario, is still very much in play. I think we can get inflation a little further down, and the labor markets are still probably going to hold their ground.
And you think the Fed's going to hold rates as is? They're not going to hike anymore and hold for how long? And what will that have? And how much of an impact will that have on the markets?
Oh, I think an enormous market. I think the market needs confirmation. Are they really stopping, or what's going on? I think my impression from yesterday's meeting is that they would let the lag effects take a hold, which I think is the right move, and just be patient. So with that said, I'm expecting yesterday's move to be the last one for a while, unless we see inflation all of a sudden spiking up, and I don't see that happening.
Coming back to Berkshire and Apple, when you take a look at both of these companies, which do you think is the better choice? I mean, would you be an investor in Apple? Or I know that you are, but do you recommend that investors look at just Apple, or do you recommend that they look at a company like Berkshire, which holds many other companies as well?
Right, that's a good question. And for that, I have a two-pronged answer, basically, for that one. So number one, it depends on the kind of investor. So if you're a bit more aggressive as an investor and don't mind the bumpy ride, I would say go with Apple. Apple is there for the long term, and I think they'll do fantastic long term. Short, if you are a more conservative investment who doesn't enjoy the roller coasters, then you should stick with Berkshire and Hathaway. Just go that route. I think they're excellent choices, but I would distinguish them in that sense, depending on investors' appetite for risk.
And some of these companies, Berkshire and Apple, they are sitting on a lot of cash. I mean, how do you see them spending that cash?
Well, in case of Apple, I think that cash maybe they'll better off returning some of that to the shareholders, in terms of increasing their dividend. We'll see. That's a way to definitely tackle any kind of economic slowdown, a temporary one at least, and something they can definitely manage and pull through.
And you are bullish on Apple and on the economy as well. Thank you so much, Francisco Bido, FM Investments Head of Quantitative Research Portfolio Manager.